culture. So it was probably not surprising that it was only when Boris shut all the pubs that the gravity of the situation sank in and the commercial finance world was turned on its head. Now, I know I don't look old enough, but I've actually been either a banker or a broker through quite a few world and UK events that have rocked the financial services industry. Because I know what can happen, my immediate concerns were for my clients that had finance facilities agreed and at various stages of being implemented. For example, in 2008, we saw high street names pulling offers. I recall one phone call where the lender said they were unable to complete on a loan. I pointed out they'd already offered, the offer had been accepted. They said, tough, sue us, we don't have any money. So history tells us that in times of trauma, normal protocols can be thrown out of the window. Thankfully, I don't think Enness has had any cases since the lockdown that have fallen over at a very advanced stage. We have heard stories of this happening on a relatively small scale to some. However, we have had lenders who had issued terms because of coronavirus not being able, or perhaps willing, to honour them. Now, that's very frustrating for us brokers and borrowers who made plans based on those terms. And it would be very easy for us to point fingers at lenders and say, oh, you behaved dishonourably, or you let us down, or you didn't support the industry in its hour of need. However, these are all commercial organisations in the main make their money by lending money. So I'm sure decisions like this are not made lightly. And we simply don't know what restrictions have been placed on them by funding lines, etc. So not my place to judge, and I hope they get back in the game as soon as possible. Might be quite fun to throw some names around on the topic, but we're not going to. So right now, we have some lenders who have simply said, we are not lending until further notice. We have some lenders who are very much still lending, some on different terms to usual. And then there's a third group of lenders who are saying they're open for business, but when we're testing that, in reality, they don't seem to be. I think it's fair to say that the high street lenders in the main are not showing any great appetite for new real estate transactions right now. They're busy helping businesses that they bank get through this, and some real estate teams have been redeployed to other areas of the bank to help where there's most pressure. Within the specialist space, the lenders that are still lending seem to have the capacity to do so whilst managing the existing book. Some have been very proactive as well as a direct result of coronavirus in the UK. Being proactive, they've been phoning existing borrowers and asking if they're okay, whether they'll be facing unexpected financial burdens due to lockdown, which I think is very positive. I think we have seen loan to values on offer come down, not massively, in the main, probably 5–10%. Some have gone as much as 25%, however. So with less competition in the market, has the cost of funds gone up? I don't think we've seen anyone specifically taking advantage of less competition and radically increasing cost of funds, but many will be in our quoting pricing towards the top end of their usual scale in terms of interest rates. Fees so far have remained largely unchanged, I would say, in my experience. Now, many people have said it's all very well having lenders that will lend, but what's the point, surely, if you can't get anything done with everything locked down? Well, surprisingly, we are getting things done. I've got a loan that should be completing by the end of the month, where the entire life cycle of the loan has been done during lockdown. Firstly, legals. Now, I have been known to have a little bit of moan from time to time about solicitors, and I admit that was one of my big worries in terms of keeping the show running at this difficult time. However, I have to say, my experience thus far is that they've really upped their game, trying really hard to work with lenders, borrowers, and brokers to find solutions to problems that, frankly, we never thought we'd have. Things like seeing original documentation, face-to-face signing of mortgage deeds, etc. By and large, they've worked with us to find practical, quite often quite inventive ways of getting these things done. No one's cutting corners, but just using technology to the best of its use. So if there's any lawyers watching, thank you very much. Similarly, we can still get most types of asset value, which is surprising to some people. The RACS put out some very clear guidelines as to how evaluations were to be conducted by their members. Some firms admittedly have decided not to carry out any visits at this time, but many are, wherever it's possible to do so, following the guidelines and keeping everyone safe. What has been frustrating is where perhaps panel managers have decided not to instruct any evaluations, even if firms on their panel are still working. But I guess at such emotive times, we have to respect other people's decisions. We've also seen lenders being inventive where valuations are difficult, perhaps using a retype, automated valuations, and some simply doing their own research. And broadly, we're finding that the values are holding up quite well at the moment. One of the concerns for me was when the RICS came out with its material valuation uncertainty clause, which is going into all reports now, or certainly most reports. Effectively, it's saying it's worth £5 million, mate. If half the country dies in the pandemic, it might not be after that, so don't blame us. I have to say more lenders are taking a pragmatic view on this than I thought they might, which is good news. So should people even be lending right now? Personally, yes. I don't think there's any one scenario where you could say people shouldn't be lending. It's about responsible common sense lending with good old fashioned underwriting that is needed, and that is happening. In normal times, I spend as long speaking with lenders as I do my borrower clients. I think it's essential to be constantly updating lenders' offerings and seeking out new sources of finance. As brokers, we have a responsibility to deliver the best financial package to the borrower that we can. You can't do this unless you know the whole market, and that market isn't always visible on the high street, online, etc. They are family offices hidden away in Geneva. They are specialist funds tucked away in Guernsey. You have to go looking sometimes. And I think for the people that have spent time seeking these entities out, it's at times like this that it pays dividends. We didn't set up our office in Dubai just for the weather, or so I'm told anyway. We're working with a very broad spread of partners right now, including other brokerages, law firms, accountants, etc., to make sure that everyone knows that we have access to these funds and we can make things happen where perhaps others might not be able to and can be accessed. So it's all sounding quite positive thus far, but we are not out of the woods yet, far from it from an industry point of view. There are lots of risks we have yet to find out the scale of and the impact that it's going to have. On the face of it, the Treasury, in its own words, said it's taking unprecedented action to support businesses. Measures such as a coronavirus business interruption loan scheme should be available to all firms that were solvent and trading at the time of the shutdown. But the reality is banks aren't set up to provide loans this quickly. Bureaucracy is getting in the way. We know some business people are being told that banks are only required to lend according to their pre-shutdown criteria, and construction, for example, was outside of policy for many. The British Chamber of Commerce said last week that only 2% of UK firms have so far secured these loans, and 17% of businesses only had enough cash to last a month, and 36% had less than 3 months cash reserves. We also face the danger of borrowers not having rents paid by tenants. I think this is a largely unknown threat thus far, but it is a very real threat that we're yet to see the exact quantum of. People will people with loans coming up for expiry being able to implement their planned exit strategies? Will they be able to get the right exit funding on developments? Will developers be able to get materials to site even if they can get onto site? I think we all know where the macro economy is heading, but will that be a U shape or a V shape and hopefully rise soon after? That remains to be seen. Whatever happens, the commercial and specialist finance industry is in the main open for business and supporting businesses and the UK economy as a whole. It's done through 9/11, Brexit, general elections, recessions, and now something of an unprecedented global scale. I actually feel quite proud to be part of this industry and doing what we're doing right now, and I haven't always felt like that. There's lots of lenders, surveyors, lawyers, some specific people within lending organisations I'd like to name and thank you, but this probably isn't the forum, but hopefully you know who you are. Based on what we've seen, where there is a will, there is a way through this. But constructive engagement between lenders and borrowers will be critical now and moving forward. I really hope we can all get back to our business as usual, as we did pre-pandemic, very soon. I think that's all I really wanted to cover. So I'm happy to take any questions if there are any. Okay, I'm not seeing any come up, so thank you for taking time out of your day to join me, and I hope the rest of your day is fruitful. Thank you very much.